Hello, everyone, and welcome back to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options. Most of you are likely familiar with me by now. For anyone that might be new or joining us for the first time, welcome. It's great to have you on board. We do have a process of where we have to go through the housekeeping details of the session, and then I will introduce Mr. Rob Roy. So first and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Again, this is available on our website at all times, so please feel free to check it out there or take a screenshot of it now if you like, but that was the main point to take away from it. We also have a process for asking questions as well. Most of us, again, are likely familiar with that process, but for anyone that might be just joining us for the first time, we have the screen displayed here for you as to how to ask questions when Rob gets to that portion. The Q&A portion, I must note, is limited as we have a 45-minute presentation from Rob, and with the time remaining after the case studies, we open it up to a question from a number of platforms. So we never get through all the questions. We always have so many very intellectual and thought out questions, but sometimes we just can't get to them due to time constraints. So again, if that is the case for you, please know that has nothing to do with the validity of the question. We just only have so much time, and please take that as encouragement to attend the insiders meeting where there's a 45-minute Q&A portion with both Rob Roy and Jeff Beamer, and a very high likelihood of getting your question addressed there. All right, so let's move on into the good stuff. Before introducing Mr. Roy, have my own comment slash question to get in there before we get into Mr. Roy's presentation. So the JOLTS report today showed the jobs market continues to cool as the Fed wants, which is positive for no further rate cuts. However, the market continues to consolidate below resistance. I'm interested in what Rob thinks that means and where we go from here with that. And I'm, of course, very excited to interact with you all. So thank you for joining us for this live session. And at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, Zach, how are you this evening?
Doing well, sir. Doing well. How are you?
Doing well also. And as you all can see from the camera, I am back in the Dragon capsule. Came down to get a little warmth here in Florida. When I left the mountains, it was 37. I got to Florida, it was 83. Crazy. Not that far away in distance, but anyway, interesting. Let's take a look at the chart of the market, and welcome everyone to TradeFinder from all the various social media platforms that you joined from. We're happy to have you. As Zach said, Zach mentioned the JOLTS report, which is job openings, without going through the lengthy acronym there. And the Fed has wanted a cooler jobs market because of wage inflation. Seems that that's happening. So the market, I guess, reacted okay. But basically what we're doing is we're consolidating right underneath this 460 level. So not a whole lot different than where we were last week, where we had moved up towards this area of the July highs. Well, we actually came up and hit the high of the 1st of December, 459.65. That's awfully darn close to 460. That's in line with the high from the 27th of July, which is 459.44. So you can technically say we did make a new high, but just barely. But you can see the chart, and I've been talking about this for a while. A couple of concerns here have been the vertical nature of this move. This is helping this kind of consolidation where we're moving more into a 45-degree angle. If we do break above 460, we've had a lot of ins and outs in very short periods of time on some long trades taking advantage of this move. But to be fair, probably could have done a little better if it stayed in some of these a little longer. But with the fact that we're at resistance here, the market could roll over still from here. So we've been quick to take gains. And I think that's still the modus operandi. Pick your spots, you find good charts, go with them. But I just, until we break 460, I don't think this is a period of time where you hang around for longer periods of time. take those quick gains and move on. We'll have an example of that a little bit later on. But if we were to break 460 with follow through, same story from last week, then I think you go long the market. We still do not have a 5-wave Elliott Wave pattern labeled, which means this is one big impulse move, and we'll just have to wait and see which pattern becomes labeled here from the Elliott Wave algorithm, and that'll let us know a little bit more of what to expect. The one thing that has definitely occurred is the 10-day moving average has caught up. So we're not overbought from the 10-day moving average anymore. You can see basically we've been there for the last 4 trading days. So right underneath resistance from July, 10-day moving average is caught up. We're in an area where through this consolidation, if we break above 460 with follow through, that's a pretty solid pattern for potentially moving higher into the end of the year. And then we'll reevaluate things after the holidays. I was all over the financial networks today of this is the bullish time of year. And it is, and the market normally drifts higher from here. I just hate when people start saying that. It almost is like a jinx. But it is historically a positive time of year. But as I've pointed out a few times, we did bottom on on December 24th on Christmas Eve a few years ago. So nothing works 100% of the time, even these comparisons and historical references. But not much else to say. We're just sitting here, we're consolidating right under 460 and waiting for the market to tell us if we're going to break above that and run, or are we going to roll over with this double top formation here and head back to the downside. Either one's possible. Without an Elliott Wave labeled pattern to guide us, we kind of just let the market tell us where we go from here. Interest rates continue to fall, and that's pretty interesting. That's been helpful to keep some of the tech stocks from making more significant moves lower. There has been a little bit of rotation into some other areas from the Magnificent Seven. Apple had a good day. But there's still some things going well in tech world, and these lower rates are helping that out quite a bit. Now you can see we're basically at a 50% correction from this big move in rates from the May low up to the October high. So big run there, 50% correction. Do rates continue to fall? Are we going to go through and violate this Elliott Wave pattern? Disqualify it, if you will, to use Elliott's words, or are we going to turn and head back to the upside? And as I've been maintaining, if we do get a wave 5 on rates, it's going to be challenging for the markets, at least for the tech stocks. But we haven't had to worry about that yet because rates continue to drift lower. But 50% correction, that's a pretty good place to bounce if they're going to. And so we've had kind of rates in the dollar being in lockstep, but the dollar is moving out on its own. It does appear to be trying to move up in the wave 5. You can see we've had a few trading days to the upside on the dollar, came back just a little bit past that 61.8% wave 4 correction here. Now, this is kind of becoming an area where you would think this is really positive for the market. Rates coming down, the dollar showing strength. As I've talked about in the last few TradeFinders, a little bit concerned about this dollar moving to the downside like this. What's occurring there? If we are going to go into even a mild recession, and again, the commentary on the financial networks today was a lot of talk about this soft landing, that the Fed is engineering things and did a great job. I think the Fed went too fast and too far, and that we will start to see recessionary signs after the first of the year. I could be totally wrong. I'm wrong a lot, but that's my viewpoint. Not that the market really cares what I think. But the fact that the dollar was sinking had me concerned about how bad is this recession going to be? Is this going to be a global recession? Because normally when you start to have fears like that, money moves into the dollar, the currency of last resort. So that's where people want to be when there becomes weakness in the economy. So far we have weakened. We've done what the Fed's wanted. We're getting into those numbers that they like. We're seeing a little bit of help from the jobs market. So it is setting up to where if the market wants to break above 460 and run to the end of the year, you're getting the right signals for that. It just still has to do it. And so I still urge caution until we break above 460 on the SPY. So again, pick your spots, find the good charts, participate in those, but don't think that all's clear. It's not all clear yet, but I am encouraged that rates are coming down and the dollar's moving back up. Feel better about that. The VIX still hanging around this 13 area. It keeps giving us just enough of a bounce to where we can have a little bit of a rally in the market, and then the VIX come down and hold in that 13 area. It looked like, and we talked about this Thursday night in the insiders meeting. Zach referenced that every Thursday night we do an extended version similar to this. Talk the markets, talk about all our alerts for our alert subscribers at ewotrader.com, and an extended Q&A there. Was talking about how it looked like the VIX wanted to break below 13. It doesn't have to hold this 13 level. It's just been a period of support for quite some time now. And in the past, when we've come down to 13, we've had these bounces where volatility has returned. Really hasn't happened yet. Still could. And it doesn't mean that just because 13 has been support for last 6 months or so, doesn't mean that we can't break below 13. We've been lower than that in the past. And if you're going to go lower in the VIX, this would be the time to do it. This lower volume, less volatility time of the year, normally moving into the end of the year. One last caveat there, though, with the lower volume that normally occurs as we move into the end of the year through the month of December and the holidays, lack of volume could mean increased volatility, and that's what we saw the year that we bottomed on Christmas Eve. So it doesn't necessarily mean it's only going to be low volatility. Lack of volume can create enhanced volatility, if you will. So again, it's just not all clear, but there are some signs to be happy with if that's where you want things to go. The Dow has been really interesting. And if you take a look at this chart, look at that move, just blowing past those July highs, too vertical now. And so we've done a little bit of sideways consolidation here. Pretty nice doji there on today's close, and we are above that 10-day moving average. So perhaps that doji means maybe a little bit of a pullback in the Dow. Certainly needs to rest. This is not what I like. You got a lot of you guys have been here week in and week out, and we really appreciate that. But you know that I don't like when we break above a resistance area in a vertical nature. I would much rather see it moving more in a 45-degree angle as the S&P has done. This is more what you want to see. So we had this vertical stuff, but then 45 degrees, like that better than what we're seeing out of the Dow with this vertical break. And so that doji makes me wonder, with the fact that we broke above resistance at 355 and we did it vertically, does that mean we're going to give some of that back and move back down towards the 10-day moving average? We don't have to, but that's too vertical for me. And I would want to see some backing and filling here on the Dow. The DIA actually showed up on one of my bullish searches, but I didn't send out an alert on it due to this factor. That's just too vertical for me. Y'all know all of my, I think they're calling them Robisms now, but all the rules basically that I follow. And that's one of them. That's too vertical breaking resistance for me to chase that move. And maybe the Dow continues higher and I just flat out miss it. But the rules have been developed over 27 years, so I'm going to try not to break them. The Qs are acting more constructively, I would argue, especially with the fact that interest rates have been coming down. You could look at the Qs and say, hey, this is a pretty nice consolidation here. We came down, tested the 10-day moving average, tried to break it yesterday, but got back up today. We had that hammer doji yesterday and then moved back up. So this is, if the Qs want to take over leadership again, take it away from the Dow, they're set up to do it. Also, that you could argue, well, that's a rounded top, and rounded tops normally indicate further downside. So you can see there's mixed signals all over the place as far as where we go from here. You can make a good case either direction, and when that happens, again, be patient and don't go significantly one way or the other at this point, I don't think. So I do like this consolidation. I like this movement in the Qs. If they want to break higher, if it breaks to the downside, that's understandable as well. And then the IWM, which really got going when it was just almost in no man's land at the end of October. We were so close to, you'll love this, Zach, the Katie bar the door scenario there on the IWM. It held on at the last bastion of potential support and then went vertically up and looked like, see, this is why I don't like the vertical moves. For those of you that may be newer joining us and haven't heard me say it 5,000 times, we went vertically up and we came right back down. That's what happens with vertical moves, and that's why I don't like that break in the Dow that way. And then we came up and we had a nice consolidation here and broke to the upside, but it did vertically again. So we're separated from the 10-day moving average. But if you're bullish the market, here's another thing that you can put in your quiver of arrows here on arguments that the market is going to continue higher from here. Small caps, a lot of people think small caps give an idea on risk assessment in the market. So if you're looking for risk on, risk off indicators, certainly the small caps are a good indicator for risk on. And the way the IWM is acting is pretty impressive. But still can't chase it right here on these two vertical days. Gave a little bit back today. And we'll see if we come back down towards that 180 level, which has been an important level of support and resistance. You've heard me talking about that the whole year, where we were in the range between basically 170 and 190, and then we went into 170 and 180 for a while. So it does kind of matter there. And we'll see. We had this nice little head and shoulders pattern here. We broke below it. We came down. That's about where you would expect it to go. So it did hold this head and shoulders right here. For those of you that like more traditional technical indicators, was spot on. And it actually broke with a nice zigzag pattern to the downside. So we're retracing that. You would expect it to come back up to where the neckline was, and that was where we consolidated for a while. A little bit of an ascending triangle pattern right here. And there's your break from the ascending triangle. We broke, in this case, to the upside. And a reminder that an ascending triangle does not necessarily mean you're going to have an upside breakout. You can break either direction out of any triangle, ascending, descending, or symmetrical. In this case, it did break higher. And it wasn't a very large triangle, so that was kind of the break that was expected. So now we wait and see, does the IWM come back? Does it test 180? Normally when triangles break out, they retrace the breakout and move back to the point of the triangle, which would be 180. So perhaps we need to give a little bit of attention to what happens in the market over the next few trading days. The futures are up at the moment, up 11, which, basically on what the market's been doing over the past 6 months or so is not much, but at least it is green. We'll got a lot of time between now and when the market opens tomorrow, so we'll see how that plays out. Looking at Bitcoin, holy cow. It's some people were picking on me on YouTube for saying that you got to stay long Bitcoin as long as it stays above that 36,000 level, and there you go. And I'm saying it even back here at 32, and it's taken off significantly these last couple of trading days, and it's up again now. This is kind of the end of chart, but it's currently moving up, and I know Zach has some positions in the crypto world, and he's smiling tonight, I know, with all of his positions, Ethereum, etc. I personally don't have any Bitcoin. I do like Ethereum, have some of that, but there's that break, and we've been talking about, is this the rally before the halving next quarter? Certainly looks like it right now. Looks like that's exactly what's going on, and I figure that this is coming in the Q&A, so I'll just go ahead and beat you to it, because we've been kind of tag teaming these in the market update over on YouTube. If you haven't been there, please go visit our YouTube channel. Elliott Wave Options there and on YouTube. So we've just been putting these together because everyone asks about Coinbase. It doesn't matter what kind of show we're doing. We do a live show on Fridays over on the Hub Financial channel. Bitcoin always comes up. So I just show the two together now. And again, we got this one pretty right way back here and said that if long as Coinbase stays above 70, you stay long. And if Bitcoin takes off, it'll probably drag Coinbase with it. That's exactly what happened. Also said if we could get above 80, because you could see that trading range that we were in from mid-August to the end of October, right between 70 and 80, just bouncing back and forth. But if we could break above 80, we might have something going. I didn't expect it to be this vertical, but there's something going right there. And gosh, these last 3 days, once again, so vertical. And I wish we could make these moves more along the lines of how we initially started. That's the kind of stuff you want right there. When you break above resistance, you want it in that 45-degree angle. That's perfect. And then we have to turn and go vertical. And I just, always concerned about that. We're a bit overbought on Coinbase right now. But gosh, if you've been long Coinbase, you're pretty happy right now. It's done extremely well for you. And as long as Bitcoin continues to power forward, I think Coinbase will. I would love to see a little bit of a rest here, though, if we don't give anything back, and we could possibly come back and test this area at 110, which represented those highs from July. That would I would feel a lot more constructive about it right now. If we came back down, if we come back down and test 110, you're testing those July highs. We get back to the 10-day moving average, so we rectify this vertical overbought scenario. But it doesn't have to do that. It could continue to power higher, but I will caution that nothing goes straight up forever. And the more vertical it goes, the more apt it is to have a bit of a volatile type correction. In other words, the correction could be more vertical back down rather than going sideways. So a bit of consolidation, backing and filling, I think would be really constructive for Bitcoin for Coinbase to continue to go higher. So I hope that occurs. I think that's a better longer term scenario. But if you've been watching Coinbase and been following along with us, you're extremely happy at this point in time. Let's take a quick look at a couple international markets. We'll look quickly at Australia and the Aussie market, as you would expect, moving up with us, and actually, kind of tried to get up there and break above resistance at 23. This wave 4 is at 84%, so that's a disqualified pattern. So there's no 5-wave pattern right now on the EWA, and we went right up to resistance. You would expect that to be a point where perhaps the shorts would try to make a stand, and they did. So they've pushed it down just a little bit, a little doji here. See how that plays into tomorrow's move. So very similar to where we are on the S&P, where the S&P needs to break above, or at least the SPY needs to break above 460. The EWA needs to break above 23. So bumped its head, pull back a little bit, and then we'll see if it can mount a move higher from there. For our friends up north in Canada, we take a look, and we're right up to 35. We broke above 35, and we're coming back and testing that now, or at least going through and consolidating above it. And so that's pretty constructive there, that it's above 35. This is exactly what you would want to see on the SPY. If we break above 460, let's consolidate and then take off. So if you're bullish, that's the ideal scenario. On the EWC, we got a little bit of resistance ahead at 36, but my goodness, if we can break above 36 on the EWC, you're in clean air. My racing analogy, and you're running out front, you got clean air coming to the radiator, engine runs better, car usually performs better. My guy Max Verstappen has enjoyed that all year long, so I had to throw that one in at you, Zach. If we break above 36 here on the EWC, we could be off and running on the Canadian market. And then the INDA, which did a great job of consolidating and started breaking to the upside, has exploded higher now. And here we go again. The positive we've relabeled to a wave 3, so that wave 5 pattern. So this is showing, see, there we were in the wave 5, coming off a perfect 38.2% correction, consolidating right underneath 45. The INDA did everything that you want to do for a potential break higher. But again, same scenario, so I don't need to go through it again. That's too vertical for me. I wish it would have been more 45 degrees. It's overbought right now from the 10-day moving average, but if you're long the INDA or the Nifty, you are happy there as well. But just perfect price action for a break above resistance on the INDA, and it did just that. I just wish it wouldn't have been so vertical. I told you I was going to give you an example of what we've been doing at EWO Trader for our alert subscribers, and this is kind of an example, quick ins and outs. But when you can make 69% in one day, it says 0 days, and you're like, well, how can that be possible? Well, what that means is the website tracks every single position. It gives you a mark-to-market graph, so it shows where you are each and every day. But it shows that the entry and the exit were less than 24 hours. That's why it shows 0 days. If it would have been, just even a minute over 24 hours, then it would show 1 day in the trade. So it was entered on the 9th and exited on the 10th. So clearly it didn't all happen in the same day. But that exit was less than 24 hours from the entry. And so we take a look at the entry that was sent out on November 9th, and you can see here's the pattern set up. The DMI looked really good. And so we're saying, it looks like, the third time's a charm. My mentor told me that. Some of you have heard me say that before. And basically what that means is that the third time you test a resistance area, whatever happens, in other words, if you break above it, usually means you continue to the upside. If you break down, it usually means the upward move is over and you're heading lower. So whatever occurs on that third test is usually where you're going to go. But with that DMI looking as good as you can set up a DMI, the separation between the two directional indicators, the ADX moving up, was certainly indicating that we were likely to break that resistance area. And so we sent out an alert, and that's exactly what happened. And then you can see, this is these rules that I tell you about, we follow them. It broke vertically. So it took off, and we were able to get that big, nice gain in less than 24 hours. So we're not going to pass that up. Almost 70% in less than 24 hours. We're going to take that every time. And to generate that much profit in one day, you would expect it would be pretty vertical. But, you're sitting at a spot where you get IV rush into the call options. So if it backs up and then moves up from there, you could actually have the stock price higher and the call options not have as much value, because if the stock consolidates and then moves higher, the IV comes out. So you take that nice gain on one hand, and you want that IV rush as well. It doesn't mean you can't re-enter this position later, but each and every alert that goes out has a page just like this, where it shows the symbol, what strategy it's in. The impulse strategy is our directional strategy. It gives you, here was the Jan 600 call. And then you can see you have your entry and exit prices. Enter at 360 a contract, exit at 610. Nice gain in a very short period of time. So that was nice action there. But we've been doing a lot of that. Just you get a nice gain, you take it. Don't hang around too long until we get that signal. If we get the signal on the S&P that we're going to break above resistance. All right, taking a look at some of our case study considerations that we do each and every week here at TradeFinder. The difference is that we identify a candidate, and then you're on your own on to what strategy you're going to use, how you're going to handle it, when you're going to get out, all that kind of stuff. Different from our alert service at ewotrader.com, where we send out alerts via email and SMS on entries, any adjustments and exits. So BP has not been a cooperative case study consideration. We looked at it back in the middle of October, and that vertical move was one thing. And here we go back down, and we're just holding above 35. as long as it can stay above 35. This one doesn't make sense. So I like the fact that we've had the interest rates coming down. I like the strength in the dollar. Let's bring up a chart of oil real quick. That probably is going to come up. And why isn't oil moving higher? That's the reason BP is where it is. And this is the last piece, that if the economy is going to stay strong, which is what everybody is saying, that through the rate hikes, we're not going to have any sort of significant recession. I'm not in that camp, as you know, because the bond market is telling something different, and I just do not ignore the bond market, even if I end up being wrong. It's still the rules of the trade by, and I'm not going to ignore that. And oil, I didn't understand why the dollar was going down. It's turned and gone back up. Now, can oil follow suit? But if BP breaks 35, then that has to be an exit there. Then MPLX, we looked at the same day, also up there, and came back down. That one was a bit vertical as well, but now we're back up, even just a little bit higher than the entry, but with time go by, probably about a break-even position if you were trading options on that one. So we'll see if it can break above 36.5 and hold it. It gave some back today. So we're right at resistance. So it turned it back, similar to what happened on the chart of the EWA, the Aussie market. And then GLD, that one took off, and there was once again a disqualified Elliott Wave pattern. We had sent out an alert to our alert subscribers on GLD. We've already taken it off. We already took the gain, but you see this move here on Friday. And if you didn't take your profits then, that might have been a little bit greedy. Big bar to the upside there, vertical move, a little bit overbought. We've come back down. I don't know if we're done with the move to the upside in GLD, but we're going to be done with this alert, because definitely we're getting a bit greedy if you didn't take those gains on Friday. But what we're going to do is keep an eye on it. Expected this to have a little trouble here at 190, because that was the highs in both April and May. And we do have a nice zigzag here, so we're cognizant of that. And that could certainly foretell a higher move here, perhaps up to the 100% extension. It had a 38.2% B wave correction. That's supposed to be a 61.8% extension. That's exactly where it went. This is why we look at Elliott Wave and we look at these zigzag patterns. So it did exactly what it was supposed to do, and then it's pulled back. So we're going to watch this. Can it get above 190 with some follow through without being such a vertical move? We'll probably come back in. I would love to get back into gold in some way, but we need to see the break above 190 for the GLD to come back into a new alert. So watching 190 on GLD, but that was very successful. Case study consideration here at TradeFinder. So MPWR, we're looking at that, and it's higher. It's kind of turning to the upside here. That's kind of what you want to see. I don't think you would exit this one yet. Let's give it an opportunity and see if it can get above that 580 level, because if it can, that would take off. So let's see where we are, 535 and 553. So we are up 18 points. I might take that back. It's probably going to run up and test 580 though. And maybe that would be your exit, but it's up 18 points since we looked at it. So that's pretty good. But we made a note that we were looking for this test highs near 600. That's what I wrote down in our notes here from the 14th of November. So let's let it play out and see if it does that. So far, so good on that move. And then Visa, we're taking a look at there, and nice break. We had said that if it closed higher on the next day, we would go in, and it did. And we're just kind of churning to the upside there on Visa. So gave a little bit back yesterday, flat today. But this is the kind of movement that tends to hold. And the holiday season, haven't seen a whole lot of information come out from the retailers yet on the holiday season. Well, the holiday weekend, I should say, Black Friday, Small Business Saturday, and Cyber Monday. But if those numbers are decent at all, you can see Visa continue. So I think I would stay with that one as well if you're following that. And then we looked at Domino's Pizza last week. We said we thought it was going to, again, disqualified Elliott Wave pattern. That's kind of what you're seeing in the market. It just reversed. We had set up a few downside patterns and the market reversed, heading back to the upside. Really nice zigzag right there. But we were just going to 400 here. So we were just looking at a nice quick little potential move up to test that resistance from July and August. And boom, it did it yesterday. So that one's done. If you wrote that down, if the 400 was your target, you should have taken your profits yesterday. So a couple nice gains to cross off the list. So shrinking our what would be considered a still open case study consideration. So pretty nice movement there out of our alerts, except for BP. That's the problem child in this entire list, and that's because oil is not showing the signals that everybody claims, the soft landing and no major recession. Oil should turn if that's going to be the case. So keep an eye on oil to give you an idea of what's going on in the economy. All right, so let's take a look at search and see if we can find anything. And those of you that haven't joined us, we do this together. So updated the software. This is the program's called Profit Source from the Hub organization, hubb.com. If you want to find out more information about it, you can send them an email, support@hub.com. This is the end-of-day version. We do have a beta version out, or they have a beta version out. I've got a chance to see it, obviously, because I'm a big proponent of it. So I've been playing around with that. Now, live version, so live Elliott Wave and all the things that we enjoy and all the things that I show you live. How cool is that? So get in touch with them if you like this software, because it's just getting better. So it'll be available to the full public here very soon. As I said, it's sent out beta version to select people, and I was fortunate to be one of those. All right, so on the impulse search, there's 4 to look at. Costco. Well, Costco had been on the search a few times, and it looked pretty good. I thought today might be an opportunity to get out, and then lo and behold, there it is on the search. So I don't know about that, but I'm sure you saw the one below it, which we're definitely going to take a look at. So that nice move there. Maybe Costco continues higher from here, and my thoughts were a little premature, but let's look at the DMI. Good volume on the move today. It's trying to tick above 20, so getting to the point where it had been a while, so perhaps a new position on Costco makes a lot of sense if we get a follow-through day tomorrow. So tomorrow's going to be the key on Costco. I don't know if we'll make this one our alert, because I definitely want to look at that next stock. So there's the break above 600. As you know, I want a follow-through day. I like the fact that this wasn't some massive spike. So we like to have a follow-through day. And if the ADX continues up, it did break above 20 today, which is a key level. If you've watched this, that's the level I look at on the ADX and the DMI. The negative directional indicator going down, positive going up. They're separating. That's all exactly what you want to see. So a follow-through day tomorrow basically gives you a technical entry to continue higher in Costco. The negative here is at 178% wave 5 extension. That's a very extended wave 5. So that's places a bit more importance on, do we get follow through tomorrow? This could perhaps relabel into a wave 3, as we saw earlier. So keep a close eye on Costco. That one could be definitely one to watch, but I want to see tomorrow first. So I don't think we want to send that out. And there's Apple. I mentioned Apple earlier, and I don't know how we can do anything other than watch Apple. So kind of a similar scenario, but different at the same time. As with Costco, above average volume on the break higher today. And they did have some positive news on some collaborations that they're doing. But you can see that the ADX is already higher. So it's already told you that there's strength to this move. And we are right here up against this level at 195. I just can't see Apple getting up here and not breaking above 200. And when Apple shows up on the chart, it's really tough to ignore. So we had pretty close to that 45-degree angle consolidation here, and it looks like it wants to break higher. Looks like a pretty good entry there on Apple. It's not in an Elliott Wave pattern yet, but if it breaks above that 195 level, it will certainly label into some sort of an Elliott Wave pattern. So let's just go ahead and go with the popular stock here with Apple. So that's going to be our case study consideration. And again, the difference between that one is the fact that the ADX is already higher. It's already showing strength. That's the difference between Apple and Costco, but Costco looks like it's setting up great too. So both of those look like pretty good setups with the DMI being supportive. Just want to see one more day on Costco. This Apple chart is very reminiscent of what we did with that KLAC that I showed you earlier, where it was also underneath resistance. The DMI showed support that it's likely to break it. That's what's happening right now as well. So same exact setup as that KLAC. That worked last time. Doesn't guarantee it's going to work this time. There's no guarantees in the world of trading. You know that. There's nothing that's 100%. No indicator works all the time. But, been around a long time, have rules to follow, do the best to put as many percentages in your favor as you can. And so that, Zach, is our case study consideration for tonight. So I'll open it up to any questions the folks may have.
Sounds good. Yeah, I see we have 3 minutes to spare, or you finished 3 minutes early, that is. So let's get right to it. We have tons of great questions, as always. First one we're going to go over to is spot for Manuel.
Oh, yeah. Probably saw the news on good old Spotify, and big move higher there. Let's take a look at the earnings, and we have earnings report gosh, towards the end of January, so it's a ways away. So this one's going to kind of be a mixed bag. Here's the perfect move up in consolidation around resistance right there from July. And you already know what I'm going to say, gapped up and kind of vertical move. I would have preferred it just to continue on this track and keep going. It doesn't really care what my preference is. Solid volume behind the break. And then you have backed up by another good volume day today. Everything looks great for Spotify. Perhaps we get a test down to 180, maybe not. DMI looks good. So I think we probably see that 220 level there on Spotify. For those of you that are newer, looking at Elliott Wave, when you see these projections here, they're just that. They're called time and price projections. You can see we're in a wave 3. This fact that this 4 shows up on the chart does not mean we're in a wave 4. What that means is that if we start a wave 4 right now, that's about where you could expect support to kick in, and then likely followed by the wave 5 with a target price up around 220. But the illustration here of the wave 5 being shown at 220 is saying that for whatever reason, the algorithm likes that price. The Elliott Wave algorithm likes 220. Now, the wave 3 can go to 220. It doesn't have to correct into the wave 4 first and then go up there. So the likelihood is that we're going to go to 220. What we don't know is if the wave 3 continues there and then we correct a bit. If we go up to 220 in the wave 3, these targets move. The wave 5 will move higher. So it doesn't mean we have to correct and then move there. Sometimes people get confused with that. And I see that in the comments on YouTube, etc. It just means that the algorithm likes the 220 price. It can continue there again in the wave 3. But if we correct, that's where you think it's going to go. Looking at the DMI, the move looks very strong. It's a clean break of resistance with good volume. I think Spotify goes higher. I'm not sure once we get to 220, we have to take a look then.
All righty, next up, we're going to go to the very expensive but very high quality clothing brand of Lulu.
It is expensive, but it is good stuff. So I know you and I've had conversations about this kind of thing before, Zach. You're a believer in you get what you pay for, and you're not afraid to put your money where your mouth is. This one's a little tricky because you can see earnings right on the horizon here. 2 days on the 7th, we have earnings on Lulu. Just this has been a strong move into earnings. The earnings is kind of the wrench in the works here, the bit of the unknown. But we know that that move into earnings has been strong. It hasn't just crept into earnings. Now, the tricky part here could be what Lulu says. You know, are they going to pull a Walmart where Walmart had good numbers, but then they were very cautious on their guidance, and that knocked Walmart down. It knocked Costco down for a while, even though Costco turned and went right back up. So is that going to be, you know, this is going to be a very interesting earnings report because it is higher end leisure wear. And, you know, they've done a magnificent job of, you know, it was all women's yoga clothes was the initial makeup of their retail outlets. And they branched out into men's clothing. And you know, you can say they got a little bit of an assist with COVID. Everybody's staying at home, a lot of more leisure wear, and the men's line just took off. And that's really been helpful to their bottom line. And so, you know, I would be surprised if they don't do well on earnings, but are they going to, you know, throw a whole bucket of ice water on the whole thing by saying, yeah, we had a great quarter, but we're a little concerned about the consumer spending going into next quarter. So this is going to be, in my opinion, just my opinion only, going to be all about the guidance. So this one's tricky. Strong move, looks great, probably is going to have a good earnings report. There are times when I will trade through an earnings report. This one's a little different based on where we are economically and the company. And so this one, I think I kind of want to see not just the earnings report, but I would want to see what the guidance is and what their viewpoint is. I think that could be well illustrative of a lot of other retailers. So, you know, it has a habit of doing well on earnings. On this one, I think I want to be a spectator and see what happens.
Yeah, you know, I gotta say, Rob, you had it right. I do seek out quality when I can, but I feel you can relate to that as going back to reference your comment on Max Verstappen. It's a pretty high quality driver there, and I'm sure that was a pretty tough man to get behind as your favorite. So,
you know, you keep giving me because you know Zach and I are both racing fans, and so we have these little conversations all the time. And so I've been talking about the guy had a record year. He won 19 to 21 races, and it's never happened before. And he accuses me of being a bandwagoner, but I was a fan before the season started, so I'm not letting him get away with that. Anyway, let's move on.
Tell it to the judge. Yeah, let's get some questions. So Larry would like the AGG fund overview and a little bit more context there. I think the bond rates across the curve has more to do with where we go forward. Can you have Rob do an analysis?
AGG?
Correct. It says AGG fund. So
yeah, it's a bond ETF. So let's take a look. You know, the bonds have been rallying, as you can see. And so this would be the opposite of what we see when we look at TNX, because when we look at TNX, that's rates. This is prices. So prices and rates move in inverse proportion. Obviously, prices go up, rates go down. So if rates are going down, prices are going up. So bonds have been rallying. And we are right at, this is another tricky one, we're right at a big fib level, the 61.8% fib level here on the wave 4. So technically it's in a 5 wave to the downside pattern, But then when you come and look at that DMI, that's really strong. That's a very supportive DMI. So what the DMI is suggesting is that this is not, oftentimes a wave 4 correction doesn't show that kind of strength. If you're going to continue down in a 5-wave to the downside pattern, you usually don't have that kind of strength out of the wave 4. It's usually a weaker move, and then you roll over and you head back down. So we have two things pushing and pulling right here. We're at a very strong fib level, which would suggest some resistance here, and perhaps even a pullback, if not a full-fledged wave 5. But then the DMI is saying, hey, this is going to continue, and we might even disqualify this Elliott Wave pattern here. So it's a real good push-pull. Very interesting looking chart. I know you guys don't like it when I don't give a more definitive answer, but once again, I think we have to see which one wins out. Does the DMI win out and we break above that 61.8% level? Then I would say rally on bonds. But if we hold here, it's another one of those things. I have a lot of respect for the 61.8% fib level. It's the strongest of all fib levels, in my opinion. So let's see if it can break above it. The Missouri thing that I use all the time. Show me. Can you break above that 61.8% level? Well, if it does with that DMI, then I say the bond rally continues and rates continue to go lower. That would be very constructive for the markets if that happens. So another one that's tricky to make a call where we go from here. Kind of got to watch this one too. So that's just being honest, and it's being prudent, and it's being good risk management not to step in front of things that are conflicting and hard to determine.
Yep, all vital aspects there. Let's go over to Hood for Will.
Really anxious to see what happens with this. Look at that move. And Will already know, he watches enough to know that what I'm going to say, it's too vertical right here. But man, look at that DMI. It does make you want to chomp at the bit and jump in here. It seems hard to imagine that we're not going to go test 13 now. With this kind of a move, there's a little bit of resistance at 11, but not a lot. So it's hard to imagine we don't test 13, especially with that DMI being so supportive of this move and a continued move to the upside. But the move today is so vertical. We're overbought now, and I can't chase it right now. Maybe it goes straight to 13. And I miss it. And I'm happy to miss some of those because too many times I tried to chase these moves and got burned because it reversed and came back down. So I'd rather miss out on one than, enter one knowing better and have it reverse and go back down. We kind of got a little bit of a taste of that on BP. That move was probably too vertical to take a look at that one. Just kind of felt like oil was going higher. So don't want to, repeat mistakes. So I'd like to see a test here at 10. Super good volume, almost too much of a volume spike. So that kind of plays into it as well. When you get these kind of spikes, what I mean by that is when you would think, well, that's great, more volume, the better. But when you get these huge spikes, it kind of is a short-term, goes into a lull. It's like everybody that wants to buy just bought today. So where are the buyers going to come from tomorrow? And then the stock tends to kind of retrace a little bit because there's a lull in buyers. And if the trend's going to continue, if that occurs, it usually pulls back a bit and then new buyers step in and it continues to the upside. So especially looking at that volume chart, again, I couldn't chase it today. I would love to see consolidation right here around 10. And then I think that would, if it would back up to 10, I think that would make a great entry. It may not do that. It might run straight to 13. But for me, I would want to see a little bit of give back here before I would take a look at it. Too vertical, too overbought, too much volume to go in tomorrow. But certainly we want to keep an eye on it. So let's make a note. Will, I'm sure you can help remind us next week to take a look at it again. Perhaps there's an entry well before then, but you know what I mean.
I'll be watching that one as well, and I think that was a very clear explanation there, Rob, and breaking that down, because it seems as though, correct me if I'm wrong, that this might be maybe riding of coattails from just the recent crypto, I guess we'll say bullish bump. Who knows how long it lasts? Hopefully,
highly likely.
Yeah, seems like there's reversal in that future. All right, let's go over to CCL. We've been reviewing this one pretty often, so maybe a succinct one. We'll get in to what we can with the time remaining.
Yeah, I've made a lot of commentary about this. None of this move lower made any sense to me at all. And this makes a whole lot more sense. Y'all know, you've heard the stories. Went on a cruise, talked to the Carnival people. They're booked for 2 years. Everybody wanted to get on cruises. I don't understand what went on through this area here into October, but this makes a lot more sense. I think this wave 5 gets disqualified. I think Carnival continues. I think that's been kind of the theme. And so at this point in time, breaking above that 61.8% level, we're still close enough of it to pay attention. But once again, an extremely strong DMI, supportive of the stock continuing higher, probably disqualifying this 5-wave pattern. And that brings us into kind of what we're just talking about with Robinhood, a likely test of those July highs. So this is the kind of stuff too that when there's money rotation, when you're at a resistance area and the markets run up, a lot of stocks like the Magnificent Seven and all have had big runs. So the money goes to find, okay, what stocks have lagged behind? So if the market is at resistance from the July highs, what stocks look constructive but haven't reached their July highs yet? That's where a lot of rotation goes. This is the kind of stock that can do that because it's backed by good fundamentals, at least from what the people at Carnival told me. So I think you see 19. I like Carnival to continue higher. I like it a lot.
All right, symbol rapid fire time, DKNG.
Oh gosh, this is the sweet spot for DraftKings, right? And we've got football season in full blow. We have kind of a doji here, so I have to see how that plays out in tomorrow's trade. But doesn't bother me. This is a test back to the break of the August highs here in DraftKings. And right after football season ends, then you move into March Madness. So you got the Super Bowl, the biggest betting event of the entire year. Maybe a little bit of a lull, but you go into basketball pretty quick after that. And then you have March Madness. So it's a pretty constructive time for a stock like DraftKings. Now, the DMI is showing the ADX rolling over a bit more than you would want on just a test of the break. You would expect a bit of change here. A little concerned about the slope of that ADX. So let's keep an eye on 35, especially with this doji today. A break below 35 and thesis changes. I don't think you want to be long. If it breaks back down below 35, you're out. So if you wanted a real speculative try right now, you could jump above 35, or you could jump on it now as long as it stays above 35, because your stop is very close. If it breaks 35, you're out. It could hold there and bounce up towards that 42 level. So, if you're looking for something speculative, that could be there, but exit if it breaks below 35. Next.
All right, we looked at GLD. Let's quick look at SLV. Excuse me.
Okay. Yeah, figured that's where you were going. Kind of very similar with that big move in gold, a little bit of a pullback, except gold needs to break 190, SLV needs to break 23. I think gold had a little bit better move here than silver did, which is a little surprising. It hasn't been that way for a number of years, few years at least. But it needs to 22. It could hold at 22, which would be the most constructive thing for being bullish. But there's a ton of support at 21, so it could even come down there. Break below 21 changes everything, but there is some support here at 22, so I might try to hold here. Even if it did break 22, I guess what I'm trying to say is that I wouldn't be concerned unless it broke below 21. Break below 21, you're out or even bearish. But let's give it a try and see if it can hold 22. So, you keep an eye on that 190 level on GLD and 22 on SLV. Let's do two more.
That's perfect. Let's go over to GameStop.
Haven't looked at that one in quite some time. So getting a little bit of a bid here. Earnings, when are earnings tomorrow? Yeah, holy cow. No idea. You know, it's you would think a seasonally good time. But I'm this is just a flip of a coin here on what happens. The one thing that is constructive with GameStop is the management was very smart during the meme craze and everything when these stocks went nuts. They raised a lot of money. They shored up their balance sheet. The company was on its way out of business, and they were able to raise a whole bunch of money. Can they survive? They seem to have a pretty decent plan to me, but I who knows if it. Just from a common sense standpoint, they're branching out, they're doing other things, they're using their money wisely. So perhaps they survive, and GameStop branches out and becomes more than what we know of it today. Maybe we'll get a little bit of indication of that on this earnings report, but there's no way I can step in front of that earnings report tomorrow. But it sure will be interesting to see. Anyway, sorry to get more definitive there, but.
No worries. We have tons of great questions as always. It seems my voice is going out a little bit, so I apologize if I'm raspy.
Yeah, you've had a rough time, so
not sure what's going on there. But yeah, no, we have tons of great questions as always. I apologize to anyone that we didn't get to. We just have limited time for this free service that Rob is so gracious to provide us with. So let's see how Amazon settled up after Black Friday and then on that.
All right, it's a good retailer to take a look at, and they are going to be the driver. So I don't think we have enough information from them yet to decide. The DMI has gotten tired of waiting. You see it's kind of going neutral here. It's not really bearish. It's not as bullish as it looked a couple weeks ago. And we are kind of consolidating right there around those wave 3 highs. So once Amazon... If they do, maybe they wait till earnings to tell us. But if they start coming out with more detailed information of how that Black Friday weekend went, that's gonna move Amazon and likely all the rest of the retailers heading into the major part of the holiday buying season. I know a lot of people buy during that weekend, but it calms down a little bit and then it ramps back up. So I think that's where we are with Amazon. So we're just gonna have to. See what happens at that resistance level 145. So break above 145. I think Amazon goes to that 160 target. But if it breaks down below 145, then we have to watch 140. As long as it stays above 140, I think you're okay. If it breaks that, it's a quick move down to 130. So you don't want to see it break below 140. That's the line in the sand. So thanks as always, everybody, for your time. We very much value your time because we know how valuable it is to you. And we do our best to make this a very positive use of your time. So thanks again for attending. Have a great rest of your week.